It's been reported that Intel has fallen behind rival AMD, but CEO Pat Gelsinger celebrated his one-year anniversary with an announcement that Intel has made a $5.4 billion bid for Israeli chipmaker Tower Semiconductor. He's the conductor on the Intel turnaround train, but will their dividend survive the trip intact? Hey, what's up? I'm Russ. So I've been buying Intel. It just started a position not too long ago, and it's a company that's definitely in turnaround. So we're going to take a quick peek at some of the things that have been going on with Intel, where they say they're going, and hey, we're going to look and see if I think that the dividend will be able to remain not only intact, but still increasing year after year. Oh, and by the way, that dividend portfolio on the board back there, if you'd like to head over to dapperdividends.com, click on my portfolio, you can see everything we've got going on there. Intel, ticker INTC, is the world's largest semiconductor chip manufacturer by revenue and is the developer of the x86 series of microprocessors, which are the processors found in most personal computers. And over the past year, Intel is down 21.5% and is currently yielding a very nice dividend of 3.06%. Right off the bat, one of the things that I love about dividend stocks is that they usually provide downward price protection. We always like to joke and say that when the share price drops, the yield pops. Share price goes down, the dividend yield goes up. And when you have really good companies, that share price can drop so far and it's going to push the yield price up to a point where buyers are going to come in and start to nibble at that high yield. And once they start nibbling, they could create a feeding frenzy, which could turn a reversal and start pushing the price back up. So I think Intel is kind of at a floor here with their dividend over 3%. And that current dividend yield of 3.06% is 22% above Intel's 5-year average of 2.51%. And Intel just had their analyst day recently, and CEO Pat Gelsinger had some really interesting things to say. Now, I would suggest if you are interested in Intel, click on the link below to the webcast. Check it out for yourself. The man spoke for over an hour, but I picked out a few highlights that I'd like to play for you and have the man tell you about it himself.
We're going to build on our core competencies, and they're going to give us new opportunities to grow this company. And we're going to make it all transparent to you. We're making these reportable segments so you get to measure them just like I do. We're going to accelerate our revenue growth. And we said we're going to get to the low double digits. And some of you said, huh? How are we going to do this? Let's just walk through that and why I'm so confident for this. We see this year's growth to be moderate. The impact of supply chain challenges, the emerging businesses are launching but aren't yet significant. 23 and 24, we expect them to start to gain more momentum. We're getting our new capacity in place. And by the end of the period, 25 and 26, 10 to 12% growth rate as we're getting the full benefit of the investments as well as the size and impact of our emerging businesses as well. And we're also re-architecting the company for growth, creating new capabilities like Tower, IPOing, Mobileye, creating, foundry customer proof points as well into the future. We are just being innovative in every aspect of how we use capital, how we drive our products, how we build on our core strengths, and we're going to give you unprecedented transparency. Starting in April, we'll give you the visibility into the 6 business units, and you'll see how all of them are doing and how we're executing against what we told you we would do. We've given you creative ways of how we're going to unlock shareholder value. We believe this is creating a compelling picture for shareholders to look at us. My goal is that we double. I want to double the earnings of this company and double the multiple of this company as you build confidence in what we're doing, a 4x increase in total shareholder value. The Intel turnaround train is leaving the station, and I hope you all get on board.
So part of Pat's plan, say that 8 times fast, is to build fabrication facilities, or fabs as they like to call them, and then also upgrade the existing facilities so they can really ramp up starting to make chips for other people predominantly here on United States soil. And Intel has committed to spend $20 billion on 2 chip fabs, but ultimately they expect a total of 8 fabs in a plan that could reach $100 billion. So a lot of people think that their capital expenditures over the next few years are going to be about $27 billion, which is about double their historical average of capital expenditure, or CapEx. And this is basically going to wipe out their free cash flow for the foreseeable future. As Intel pointed out, adjusted free cash flow is expected to be -$1 to $2 billion as they invest in their long-term growth. Now, this is considerably down from the free cash flow of almost $20 billion that they had in 2020, which means their nearly $6 billion cash dividend will not be anywhere close to covered. Now, this could be concerning for many companies, but I love that Intel is committed to paying that dividend and returning cash to shareholders. And that dividend has been paid uninterrupted for 23 years now and growing for 7 years straight. And it was recently increased 5% to $1.46 a share in January of 2022. Now, as a dividend investor, this is somewhat concerning that they're going to be experiencing negative free cash flow for a few years out. But as an investor in general, dude, this is really exciting to see a company that's recognizing and admitting that they're losing market share, as we'll see in a minute, and they're starting to fall behind in the microprocessor market. And Pat Gelsinger wants to turn the company around. So he knows it's going to take a lot of money to do that, but it is definitely a risk, and there's no guarantee that this pays off. Nobody has a crystal ball to predict the future. But what they do have is just over $28 billion of cash and short-term investments that I think could sustain the dividend for the next 3 to 4 years. And that gives me the warm and fuzzy as a dividend investor and as an investor in general, that they're going to have enough liquid cash to be able to sustain the dividend for the next 3 to 4 years, I think, from the way things look. And as we heard Pat say, that by 2026, they're expecting 10 to 12% revenue growth. So low to mid double-digit revenue growth by 2026 is what they're investing for right now. But they have to do something. And as I always say, these companies are living, breathing entities, and they're going to do whatever they have to do to sustain survival for the long term. And of course, this will be achieved by a blend of traditional revenue from Client Computing Group, Data Center and Artificial Intelligence Group, and Network and Edge Group, with emerging revenue from accelerated computing systems and graphics, the autonomous Mobileye, which is really exciting, and the fabs.
Mobileye, ain't the car out there pretty cool looking? Yeah, I love it. Yeah, I want one of those. Somebody said when we were practicing, they said, hey, can I drive it home? I said, no, it drives you home.
Oh, and check this out. Intel, you guys should invest in a better proofreader. Executable path to double growth. Come on, Intel, tighten that up, baby. Now, since 2018, check this out. They've been losing market share to AMD and ARM after once owning 99% of the processor market share. So I think it's clear that Pat Gelsinger wants to tip that market share table back in Intel's favor. They realize that Taiwan Semiconductor, ticker TSMC, currently produces about 90% of the world's chips, which is no bueno. So they want to cut into that massive global stranglehold that Taiwan Semiconductor has. But here's the thing, is that Taiwan is a territory that China currently lays claim to, and there's always that current feeling that China could invade Taiwan and claim Taiwan is theirs. And since China doesn't yet produce the world's most advanced microchips, Intel currently has bipartisan support of the US government, as they think this is an issue of national security. The numbers aren't going to look great for the next few years, and I think the market has baked this in. When you have a company saying they're going to have negative free cash flow, that's going to make investors nervous. But I think, as my guy, European Dividend Growth Investor, has pointed out, that this reminds him of when Satya Nadella took over Microsoft. Now, not saying this is going to be a Microsoft play, but A man with a vision that wants to turn a company around and is willing to spend the money to do it and make it visible to everyone what is going on if they're achieving those goals. Man, I'm going to put some bucks with that guy, and I'm happy to keep investing with Intel. The world craves chips. That's not changing. That's only going to keep accelerating. They're going to need to get smaller and faster, which is what Intel is investing for and trying to grab that market share. So, hey, let me know if you're on board. Let all of us know if you're on board with Intel. Do you think they're going to fail? Do you not think that they're going to be able to make this happen? We would love to hear what you think.
Hello, Russ?
And since Intel has a current dividend yield that's above their 5-year average, check out this little box next to my head. I've got 7 more companies over there that have dividend yields that are way above, at least 21% above their 5-year average, with one of them at 77%. So if you click that video, I will talk to you there.